Hello, my friends, hello. We're here to help you know everything. Who's ready? Here we go. Hi, AJ. How are you, Bran? Ingmar? How's it going? Astra FX, welcome to Face. Aren't you a Twitter follower of mine? Glad you stopped by. Hi, Mike. Ryan. Ryan, don't you work here? RC, how you doing? Came in with his Heidi hi, Heidi ho. What's that
We're
from?
ready, Freddy.
Moner is here and Marcus, Ryan, the Consumer Pain Index. All right, yeah. Been following the shows. Oh, on YouTube. Okay. Hi, Simon. Yeah, Hotel California. Yeah, it has Bill Murray singing. Okay, let's go to work for the number, kind of prep it. And I'm going to start off with Ryan because your statement yesterday, even though currencies have begun to come out of the hole, well taken that the trend is still down. Yeah, what's going on there?
Haven't got your morning, mate. Haven't got your charts yet. Here we go.
Yeah, there we go. Okay. So Euro got to this channel line. Will that convince you? What would convince you, Ryan, that the Euro's turn?
What convinced me we need to get above at 105, 105.30.
Okay.
So
And
it's quite some way, but
all right,
yeah,
cables close. Would cable have to do the same thing and take out 5.5?
yeah, 5.5, 126 as well, 126, 10, 20, I think up there.
Okay, and
But cable's done a bit more. There's a lot of two phases to some of these dips. Like that one there, you've got the phase down.
yeah,
Well, on not on that one particularly, but on cable, you got the phase down from 134. Then you got the phase down, I think, from 126 from December, something
yeah,
like that.
yeah,
So there's different phases. Cable's taken back the first phase pretty much, but not obviously the 134 portion.
okay. All right, so it's going to take a bit. So, um, Kman laughed yesterday when I said, "Could you think we'll have a chance to sell the yen at the breakdown?"
It was a
There
it
it
was an
is.
optimistic laugh, Dale.
Yeah, it was a. It's not going to get there, Coach. Laugh, you know it, buddy.
I
Anyway,
did, and I did.
anyway, so is it worth taking a shot at this level?
It's a very well. I mean, it's if you are active trader, let's say you not only do medium term and stuff. It's worth because I mean I managed to catch it, as the people know in the room, very close to the top, and I've already managed half of it. So I'm
Okay.
going to keep it tight over the CPI.
Yeah.
Yes, it's worth it. And if CPI comes in weaker, I have a small feeling that perhaps, just perhaps, we could react a bit better on a weaker reading today, because that would calm the markets, calm the rates a bit. But then again, if you look at the date, it's still a January number, and we don't know how it's going to be impacted once Trump pushes through with whatever he wants to push through with. So no, but I think on the day, yeah, it's worth giving it a shot, and but keep it. Well, I'm keeping it tight anyway. It's
Yeah.
already basically a free trade if I get done stopped, and if it goes down, let it run back down to 152.
Okay. Thank you. I I would say that TLT, the Treasury market, needs a weak number because look at where TLT
Yeah.
is sitting. So if this was a breakdown, I don't know, it depends how thick your pen or pencil is. We're kind of flirting with
Mm,
being underneath it.
yeah.
Okay, so you need a, you know. a strong number and there's problems. I still think we're going to new lows in the
Yeah.
pounds. So
That would, of course, mean that the more sensitive currencies to US are going to suffer a bit more. And as I usually do, I always look at like, okay, which side of the coin could make which currency move the most, and there's two obvious currencies who say like if we get a high number or very sticky number, the dollar yen will probably fly through 154. And the other one is the dollar Swiss, which is still relatively big. We're in mid-range, but looking at the behavior of the Swiss crosses, this could be one as well where that retests 92 at least, the dollar Swiss. If it comes in weaker, then yeah, we bit of relief on the US bond market, and perhaps euro dollar cable, the Aussie as well could push
well,
through.
comes in weak. The euro's going to break this trend line.
Yeah, yeah. And the cloud is here too.
Yeah. Okay.
Really,
So it's got,
the bottom
hey,
of
you get off of my cloud. Don't
yeah,
hang around. Anyway, let's see. I did want to mention the metals. Okay. So it's dangerous to short it, right? And
yeah.
it could still go higher, right? Silver, people are buying it for the catch-up trade, but it could be mustard. All right. So I think the interesting way, and I saw this yesterday, brought it up, and I don't know if I brought it up here. I don't know if it was Twitter, but 92 has been a target for a long time.
Hmm.
And that's why gold was the preferred long. But I think a very good bet right now would be to sell the gold silver ratio. You have a
Hmm.
three drive to a top level. If I don't know if it's because gold will be weaker if they're declining or if silver just starts outperforming. But this is a could be a big trade. All right, it looks a lot
Yeah.
like the dollar. All right,
You
like
need
the dollar. Huh?
you need not too big tariffs and growth not to be too much under pressure, and then your gold silver ratio should come down.
Well, how about the squeeze ending? They've been loading up COMEX with gold to cover their contracts.
Mm,
There's records amount of gold coming in.
mm,
So this gold move was a squeeze. Lease rates went from under 1% to 6 during this period. Okay, so it was a squeeze. It is a squeeze. But when the squeeze is over, there's usually like a trap door. Anyway, I think this is a conservative way of trading the precious metals because I think eventually maybe we could have something like this from here.
mm.
Okay, it hasn't done anything since this big top. I don't think you'll be able to get 120 again. And
Yeah.
if it takes out 70, it could go to 50. That
No.
used to be
Unless
um
unless
kind
Trump unless
huh?
Trump tariffs everybody 50% and engineers a world global growth crash. I don't think we are going to see 125 anymore in gold silver for quite a while now.
Yeah. So I like this setup. Um so I'll go to Blake. We're going to make new contract highs today or by the end of the week in S&Ps.
Good morning.
How you
Good.
feeling, man?
Better than last night and pretty much the same as I felt yesterday. So I think,
Yeah.
as I was saying in the chat room, I think the pendulum's swinging. So last night
Yeah,
was
it
not a
takes a
fun
few
night.
days. Yeah.
Yeah,
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 you have
probably.
night
Yeah,
sweats and stuff. Yeah.
that was last night. Yeah.
Yeah, I hate that. All
Yeah,
right,
I know.
anyway. All
Anyway,
right.
I don't know. I guess if we have data that's favorable for the market, and if the data is, we see some weak CPI, I think the S&P has a chance of making a move. I think it's bid up pretty well. I don't I don't want to chase the market up here, but at the same time, you can't ignore the fact that it's just it's just elevated right up against its highs, and it feels like it wants a squeeze.
Yeah, it does.
I wouldn't want, like I said, I wouldn't want to be short. I think what we need in the equity markets is we need some proof that we're making lower lows. So that 618 retracement, the move after the DeepSeek news and the tariff news, that's the level that needs to be taken out on the downside, which, as you can see, we're perched up really nice above there for the last week and a half. So, that doesn't bode well for the bears at this moment. Now, if we get some high inflation and the CPI comes in hot, which I know everybody believes that the number is going to be hot, and I think that's what that's everybody just believes that the dollar is going to rally from current levels, and we're going to see
it looks like it looks like you looked up COT, because I saw a tweet by you that people are more bullish than ever on the dollar. Was that from COT?
I mean, I wasn't on COT, but that's like been the running theme for the last couple months. I mean, it's been,
hasn't
strong.
Changed.
Yeah, it hasn't changed. You have the dollar bulls, Mag 7, and short bonds is the trade. So that's the trade that's been really in force for a long time, and it's still a very aggressive trade. I think that on weak data, you're going to see a continued squeeze, and you can see it. Like, you look at sterling, we're right up against the 618 retracement, and you can see it's actually holding up relatively well. Euro, we're right up against resistance here, so we start popping above, the overnight highs into 104. I think that gets us back into 105, and I don't think the panic really sets in until you get above 106. But there's got to be a reason. You were asking Ryan earlier, what could actually get us above, or convince you that we're moving higher. I mean, the biggest convincer is price. So if price starts breaking out, I mean, people, whether or not they believe it or not, it definitely it doesn't matter. I would think it has to be something with US data starts to really, really weaken. But we just came off NFP, and NFP was fine, and we have CPI today. It's going to have to be a pretty weak number to even get us up in this vicinity again.
What are expectations?
Well, expectations are for a higher month-over-month core number, if my memory serves me correctly. And Ryan, you can jump in here and let me know if I'm off base. But year over year, remember, we have drop offs, so that was 3.1%. Last reading was 3.2%, but the month over month reading, we're supposed to see a tick up in the core reading. Month over month, headline number should be slightly lower. Year over year in line. And what do you think, Ryan?
Yeah, no, you're spot on with your numbers. Yeah, as to what's going to happen, I don't know. There's no reason, and I keep saying that there's no reason for inflation to really come down significantly when you've got a strong economy. But everyone's going to be looking at the housing, the shelter, the services inflation, and 25 digits and super core and every number they can pick up to make a point. But yeah, if the number's hot, then dollars rallying, yields are rallying, and the Fed stays on hold longer. If it's softer, that is I think where you get the bigger price move. But I think it needs to be significantly softer, like a couple of pips, 3 pips or more lower, because the market is not expecting the Fed to cut till June, July. Anything that brings that forward is going to get a big market reaction.
Hey guys, Bitcoin's not acting great. It looks like it wants that 92 again. Maybe it will break down this time, but if it's a measure of liquidity, it's giving us a little different message than what we've had from equities in the last couple of days. What do you think?
And I can't disagree with you. The only thing I think about Bitcoin is that it's kind of like the S&P. We're consolidating at all-time highs. So is it that bearish? I don't know if
Yeah,
it's
that's
that bearish,
right.
but remember we were talking yesterday about distribution. This
Yeah,
could be, a Wyckoff distribution pattern, but
yeah,
which would mean that, we start breaking below 90,000 and then things, get a little real.
yeah,
And the thing is if we're seeing that, we just need to be patient and seeing it. Speaking of patience, I'll tell you guys, like, personally, you guys were talking about the dollar yen, and Kman didn't think that we would make it to the breakdown point, and I didn't either. I actually started shorting the dollar yen yesterday, around the 38% retracement, and it just continued to climb last night. I think it's because Ueda didn't give us any, didn't give any of the yen bulls any fodder to really trade on. I actually took my loss this morning because I'm like, I'd rather react to the data today. So, but I do think that a failure here would be a pretty big deal. And I think and it all comes down to timing. I mean, Kman was, you were awake when we tested that previous, support, which is great because, I was fast asleep, obviously. So, but I think that's a great place to be short if you can, and because you know where your risk is. Your risk is above 154 and it's gone.
Yeah,
we're
exactly.
we're trading up at 156. But the flip side is, on weak data, we could be trading right back down here. And this is, and I want to point out on a weekly basis, this 152 level. I know I mentioned it and I tweeted about it last week. We've been on both sides of this by 150, 100 points. I mean, it's a weekly chart, and we're at 153 and change, 153.50 right now, and we've been as low as 151. I mean, it's just, I think there's going to be a lot of volatility around this big pivot level, but it's all about the data today. It really is. So, and my opinion is that I think there's a lot of great opportunities to trade, especially on weak data, as Ryan, you pointed out. So let me ask you guys this, Ryan, on weak data, what would you be looking to do? Because I'll tell you guys what I'm looking to do.
Well, it was, I think, Mo in our chat room who started on the shorting up at that dollar yen level. Then I jumped in this morning as well when I woke up, and several people have got in that level. So that's what I'm playing at the moment. I did take a little bit of an Aussie dollar long just on my support zone, but I think I might have rushed into that on the back of what was going on in the yen. So I might get rid of that before the data. But yeah, if it's a strong number, up we go, and I'm going to get stopped out on the rest of it. But if it's down, I want to see maybe we get a move down to that 152 in dollar yen, and that'll be nice if we get down there on the back of some weak data.
Yeah, it'd be some nice volatility there. And that's why, I pulled off my position, because I'm like, I'd rather react today to data and be a little bit more aggressive than just sitting there in a small position trying to manage it around these levels at this
Yeah.
point.
I think keep an eye on 10-year yields. That's always going to be important for CPI. We're above that 4.5% mark in tens, and I think that's your marker for what the dollar does. If we stay above it, it's going to stay supported. If we back below it, then you're going to see the dollar weaken again.
Yeah, I've been a little bummed out that we haven't seen a bigger move, in the 10-year. And Dale,
So
you
yeah,
can appreciate. Yeah, I was going to say,
to,
you can appreciate this. If you look at this, this is the ZNs, right? So you can look at
yeah,
this low, that
yeah,
low, that low, and we basically hit 618 and the underside of that trend line again, and we've really struggled there. So
yeah,
you know where TLT turns bullish, you know where the 10-year turns bullish, which would
yeah.
be bearish yields.
Right, right. Yeah, that low that you have even there on notes is a confirmed low. See that low in the RSI.
Yeah.
Markets usually don't bottom when RSI is under 30. That's pretty extreme momentum. So I'm looking for new lows, Blake,
So you're looking for new lows in the 10-year?
in the TLT.
In TLT, well, that would mean that you are looking for, the dollar
Higher
really.
yields.
Yeah, you're
I'm
looking for the.
conflicted. You know what? I'm conflicted. I promised myself I would trade them as individual charts, and been, bearish of bonds, but there have been some great dollar shorts. So
Yeah.
it's just another trade. I don't expect to be right. Being if the bonds crack and I'm a dollar bear, but you know what? No one would expect that. And maybe we're going to see it be more about like Kman said, if interest rate differentials can keep up, rates are going up in Europe too. Maybe the dollar doesn't soar. But you know where you're wrong. It's over we've had a lower high at that tariff high that we had, 109 and a half that morning. So that's where you're wrong. And the dollar's good if it takes that high up.
And Steve's here. I'm gonna get his commentary in just 1 second. But I do want to point this out with the dollar. Let's just talk about the dollar index itself. And I know Ryan loves to look at the dollar index here. I'm being sarcastic. I know. I know. Anyway, looks
I
like
did it
we
on the
have.
flow show the other day, and then I had to scrub myself clean with bleach after.
Did you? Well, it looks like we got a bear flag pattern, but I do care about that. But if we do have weak data, what I really want to short is I want to short the dollar CAD. The dollar CAD is just so weak.
Dead. Yeah.
It's these stops below 142.60 are just vulnerable. I know, Ryan, you talked about it on your trade-off show with Michael Brown. And if you look at the weekly, dollar CAD candle, it's so gross. I mean, it's gross, if you're bull, that's really, really ugly, but you can see that's a bearish outside week. And that is a nasty reversal. That was my chart for the
Chart
week
of the
ahead video.
decade.
Yeah, it's for my week ahead video. So I'm just waiting for, give me week dated today, and I'm selling dollar CAD. I'll probably sell some dollar yen. Those are, but if we get strong data, I mean, I don't know what I'm going to do. I might sit aside. But let's hear from Steve really quick. Good morning, Steve. How are you?
Good morning, mate. All good?
Hey, so I see you lurking around here. What are you looking
I'm a
at?
lurker.
You are a lurker. We've got gold trading at its lows right now of the session, and gold. By the way, everybody probably has seen this, but this is a really, really nasty reversal yesterday.
Yeah,
From
I talked about it on the morning edge. Yesterday was shaping up as a daily reversal, and indeed that got confirmed by the end of the day because, of course, you might have a candlestick looking some way midday, but by the end of the day that can completely change, right? We've seen that happen multiple times.
Yeah. I mean, it's the 161% extension channel resistance.
Exactly.
Looks pretty like it's gonna stick for now.
Yeah, looks the way we closed yesterday, and as I said, I warned that in the midday that if we close like that, it's likely a signal that gold is about to produce some corrective move lower. Now, in my opinion, reading too much into it, it's not a good idea, right? Because gold has been super bullish. It has spent a big part of the year going from all-time high to all-time high. So, of course, at some point, there is going to be corrections on the way. Now, do I think that, we should start talking about, a big reversal like having found the high? I very much doubt so. I think that the previous all-time high at 2790, the one we formed last October, is very likely to act as support if it goes back to back testing it, if we even get there.
Yeah, this one right here. Yeah.
Yes.
Yeah, I agree. I wouldn't want to be bearish. It just looks like it's going to give you an opportunity to be on the long side.
Yeah. Probably it's going to give us better levels to be long. Yes.
Right. Okay. Did you have anything else that you wanted to mention while you were here this morning?
In general, FX remains rather quiet, with very, very few exceptions. Right, we have the ruble, Russian ruble moving today. USD yen is extending a little bit its rebound, but I wouldn't be reading too much into that. Equities remain also, very silent the last few days. I'm talking mostly about US equities. They're in some kind of a consolidation, but even these type of consolidations, if we're talking about equities, given the prior trends, I think they should be viewed probably as bullish consolidations than anything else.
What do you think about this? Trump putting out interest rates should be lowered, something which would go hand in hand with upcoming tariffs. What do you think about him trying to put pressure on the Fed? Excuse me.
What a surprise.
Put pressure on the Fed to do what? I've said it before, right? I agree with many things on many things with Trump, not having to do with economic policy, that is. Right. I'm all for the Doge department, finding expenses that can be cut and everything else. But having to do with his economic perceptions, they're literally bipolar, right? How can at the same time promise to Americans that you're going to kill inflation while inflation has been very sticky, and the latest numbers we've got, just to give you an idea, we got the inflation expectations the 1 year inflation expectations we got a few days ago
Friday,
were at 4.3. That is the highest number we've seen since 2008. Right. So how can you at the same time...
That was a good year.
A great year.
Yeah. How can at the same time claim that you want to kill inflation, but push for the Fed to cut rates further while evidence shows that inflation is currently looking more likely, if we don't go into recession, to inch higher again than the opposite? Not to even mention the fact that we haven't even come close to the 2% target. Right. So Trump would want, there is an expression like to how is it called, to have the dog the pie.
Want to eat your cake and have your cake and eat it too?
Yes.
Something like that.
All right. Yes, eat your cake and have it too, which you can't do. Some things are conflicting with each other, right? If you really want to fight inflation, you should currently be pushing the Fed not to cut rates further, not to mention that they should probably never have cut, right? Yeah, I do understand that ideally what you want to do is go through 4 years without having a recession in hand and in a magical way having inflation going down as well. But what can we do? I mean, these things can't happen at the same time, at least in the current environment, right?
Yeah, true. Well, hey, Steve, it's going to be interesting to see, the Trump administration, how they try to navigate, eating their cake and having it too at the same time. We are literally about a minute and a half away from data. I'm setting everything up. We got the dollar index over here on the left. Bond yields right in the middle. This is the 10-year for notes, excuse me. And then we have the S&P to the right. Real quick, Ryan, any last minute thoughts before we continue, get the data here?
Yeah, can I have some of that cake, please?
Yeah, right. Kman, how about you?
Yeah, well, still the same. I think the dollar to react a little more on a weaker one, and but choose your dollar wisely. If it's better, dollar Swiss, dollar yen fly. If it's worse, euro, dollar, cable, Aussie are the 3 main ones that I'm watching right now.
Yeah. All right. Very good. I'm pretty much in line with you. And Dale, any last minute thoughts before we have about 45 seconds or 30 seconds till the data comes out?
Sell all rips in the gold silver ratio. It's going to go down to about 50. It's a big trade.
You are a silver bull.
Well, or
an silver outperformer.
Yeah, there you go. Okay. So because they could go down and it could work. too.
Right,
I mean,
right,
the
right.
metals could break and gold might have more in it.
Not something I follow quite extensively, but I know you follow it pretty closely. All right, guys, we're just a few seconds away from data. Here we go.
Hot, hot, hot.
Hot. Wow. Dollar yen above 154. Euro getting clobbered. Yeah, I don't know what I want to do.
S&P's not even moving. What's going on?
Oh no, they are dropping. S&P is getting clobbered right now.
On your screen. Oh, there it is. Okay.
Yeah, I mean they're getting clobbered right now.
Wow. Thank you, Lord.
Thank you for not being involved in any position right now. I just want to say, so I'm so happy I'm not in any trade right now. Yeah, I think what I'd like to do is I'd actually like to sell some dollar CAD on this rally.
Well, the yen got through that level by a lot.
Yeah, yen got through 154 for sure. So yeah, we're seeing a little bit of lift there. But man, look at the S&Ps get clobbered on hot data, and you're seeing pre-market markets are getting smoked. I really thought the dollar would well, now I don't know really what to do other than I sold a little dollar CAD, but other than that,
8.5's a pretty good zone. I know these candles are scary, but I was thinking between 8 and 8.5. But wow, a candle like that, please take off that 15-minute chart. It's too dramatic.
Well, I actually I
yeah.
sold some dollar CAD about 5 pips ago, so right near the highs, and I don't know if I'm going to stick around. Ryan, any thoughts before we transfer things over? Kman?
Definitely very hot data. Let's see if it lasts though. I mean, what does the Fed do with that? They're expecting inflation to come down. Everyone's saying inflation's coming down. They're going to get to target in time, and you get numbers like that. That's just blown it out of the water. So yeah, good luck getting a cut this year. You probably find the market pricing out what the one cut it's expecting.
Look at the 10-year, yeah, and TLT. That kind of locks in new lows for me. Anyone who still sees the head and shoulders bottom in the bond market or TLT, please go have your eyes checked.
Yeah, well, we're about ready to take out that shoulder, so yeah, it's
yeah.
It ends up being a false breakdown.
It's a Quasimodo sell signal.
Right.
Anyway, great job prepping everyone today, guys.
Yeah, great job. What a big rejection. I'm gonna say I'm a big rejection in the euro here, but the euro is
it's not bad.
It's a little bit more buoyant than I thought it'd be.
Yeah.
That's the thing. I think if I was short the euro, I'd be like, this is all I get. This is all that you're gonna give me. So
yeah.
Anyway,
okay. We have
all right.
Mish. We have Mish here.
What? I love Michelle.
Oh, look, you got your voice went real high. So that's so anyway, that's let's talk to Mish because I have some questions for her today. How you doing, Michelle?
Good. I'm having trouble getting my. Oh, there we go. Okay. There I am. Okay. Hi, guys.
Hey. How's it going with you?
I just want to say hi before I leave. Hi, Mish. How you doing?
Hey, I'm good. How are you?
Good. Take care. Have a great interview with Dale.
Thank you.
All right, Dale. Thank you, buddy.
All right. Hey, feel better, bro. Keep eating that chicken soup. All right. And Michelle, great to have you back.
Yeah.
Kind of a wild CPI day that we're having here. And I pulled up your important chart, okay, part of your modern family that I think spells the difference between growth and the consumer folding is your XRT. I know you talk about XRT a lot. 78 is a big level for you. We're going to open underneath it. So what do you think?
Well, you also have to step back a little bit, look at the weekly chart. It gives it a teeny bit more room down to around 77. But, let's not. That's not picky. 77, 78, is key. But more importantly than the technical analysis is that essentially, and I did a daily on this week because I found it fascinating that we have two sides of the equation on the consumer. There's still somewhat of a robust spending. And I came into this year, certainly talking about this last year, was the switch from the we to me, which I basically stole from Muhammad Ali in 1975, talking to a bunch of students. They said, give us a poem. And he said, me, we. And that has stayed in my mind because it's documented as the shortest poem ever. Right. But essentially that's what's happening.
It says everything, though.
It says everything. I know. I mean, Muhammad Ali, genius on so many levels. But essentially what it meant for me was looking at the consumer because of the diet drugs and also just because of coming out of COVID, so much money being spent on taking care of family and traveling. Now we switch more to, I'm going to take care of myself. And it's interesting because if you look at the surveys, there's been more spending on beach vacation, but also health and beauty, whereas there's also this no buy movement happening amongst younger people where they're actually in a challenge. They call it the no buy challenge, and how much you can get away with not buying anything. That's not a good thing. I mean, we cannot exist without the consumer. And what I find so interesting about this whole retail space is that it's so not mentioned. I'm glad, Dale, I'm thrilled that you started with it because nobody, at least that I have seen, has been talking about it. The main topic.
Well, you're the reason I started paying attention to it, and it makes sense to me. Definitely, Michelle. I mean, you said it. Every time we've had a recession, we've been urged, go spend, carry on with your lives, which means, running up your cards and everything. And, do you think a breakdown in retail is going to be a sign that the consumer, besides the no buy movement, that they're just no money anymore to spend, from no buy to no money?
Well, I'd say it's, if you look at credit card debt, we've seen the stats come out that that's rising. If you look at savings, we know that there has been some decline there. But we do also know that the consumers have had a lot of money basically for years now. So it's a very mixed signal, which is why my other mantra this year has been price will dictate narrative. So all these retail investors, for example, who have been buying cryptocurrencies and stocks, and particularly growth stocks, because that's all they hear about when they go on the media to listen to any of the major stations is, oh, space race, oh, chip technology, oh, AI. And they've all flooded into that and they've made some money. But if that reverses, I think it'll be a domino effect with the already pressure of the consumer. But we also know, just last thing we'll say about the consumer, is that they, in the survey last week, what was their biggest concern, Dale? Inflation.
Yeah, right.
So, the key here, and I was listening to Steve before, and I agree with him, the key is interest rates right now. We saw the TLTs come off because of the hot number. But if the consumer starts failing or the job market starts weakening, the Fed is going to turn that around. That's what Powell has been saying is, yeah, inflation's sticky, but if we start to see a real economic slowdown, particularly through labor, we may change our minds. So I think we have to see what happens. But right now, this was definitely a messy number, no doubt about it.
Well, there was some hope in bonds and the 10-year that rates were going to relent. A lot of people are calling this a head and shoulders bottom. The neckline, we're underneath it. It's a failure of a head and shoulders bottom to me. And the lows that we made, even though it's an island, the momentum reading at the low suggests to me that there's another low coming, that maybe we'll have some divergence. And this 85 level is so important that maybe what's going to happen is, how presidents early in their term face crises? Not all of them are manufactured by the president. That could happen every day now. But we could be looking at like a sovereign bond crisis, this 85.5 level, if you look left, that's what we recently held. And if we take that out, we're going to new lows, and by
and
a
think about
lot.
exactly, and think about the implications of that. I mean, again, we know that the consumer is pinched by inflation. We know that the consumer has been pinched in some areas, particularly home buying, with high interest rates. So, how much can we throw on them? And at what point do we get to see Trump all of a sudden, instead of his big focus on cutting, is like, gee, we better stimulate because we need the consumer to keep things going. And I'm not very popular right now. I mean, one thing that we know drives him is his awareness of his popularity. So everything can change. Who knows? I mean, we don't know. Of course, that's what makes the market so exciting. But there's a couple of things that we do know. And, I heard you talking about silver before. So let's talk about the silver gold ratio a little bit.
Okay, good.
Yeah, because I've got my three classic, or what I call the trifecta of inflation, right?
Right.
So number one is the silver gold ratio. And right now, I mean, silver is selling off a little bit here this morning, but not nearly as much as the gold. So
yeah, I have the gold silver ratio up there right now. So short term we made we were diverging. I was looking for 92. But don't you think this is a good entry for a decline in the gold silver ratio to revisit the bottom of the range? And then if we take it out, then you got 50. So people,
I wouldn't, yeah, I'm sorry to interrupt you.
No, it's all right.
I'm drinking my coffee and it's early in the morning. I'm a little caffeinated here.
So people could trade in their gold and get, 91 silver coins, and they'll be glad about that.
Well, yeah, I mean, just because if silver does really indeed start to outperform, that doesn't mean that gold is going to go down. I mean, gold can sit where it is and silver can still go up. Let's go back in time a little bit. In 79, when silver and gold ratio flipped, gold didn't exactly go down. Silver just went up more. So that's number one. Number two is the silver to gold ratio as a trifecta of inflation. If the silver does start to outperform gold, that is one of my inflationary indicators. The second, of course, would be the dollar. And I know you are all over the dollar. I don't know where you stand right now, but it seems to me like it may have peaked out at around 109, 110. But it hasn't actually really fully broken down yet. I'm looking for a break.
No, it hasn't.
107.50-ish, if we can stay below there. That's number two. And do you know where I'm going with number three? Because you and I have talked for so long.
The grains.
Sugar. Put up sugar.
Oh, that's right, sugar. Yeah.
Sugar.
Yeah, and what I wanted to bring up to you, Michelle, is how sticky inflation has been. And it's been this way with all the grains being in bear markets or going through big basing patterns. And they seem to be coming out of them. I mean, corn's already led for a nice rally.
Exactly.
Wheat looks pretty good to me. Beans don't look bad. So if we had inflation with tame grains, what's going to happen with the bull market in grains or some bad weather because of La Nina this year? Like we're having a drought out here. And I've seen La Nina years have that potential to spread into the grain belt in the summer, those dry conditions.
Right. I mean, I don't, you're absolutely right. I think all of the food prices have bottomed. If you look at DBA, it's actually now pre-market. We don't know what's going to happen once the market opens, but DBA right now at 28, that's a breakout. Our quants have been long DBA this whole time. But DBA has a component of sugar. So let's take a look at sugar here because do you have it up yet? No.
I'm gonna get
it. Here's DBA. So look at that. Oh, okay. I'm sorry.
Okay.
I'm sorry. I told you I'm caffeinated. I'm like,
try decaf next show. Anyway. All right. So anyway, there's
that breakout.
DBA.
Right. You've got that big spike there in 24. I don't know exactly what that news was that gave it that big spike. I don't remember, but it doesn't matter. What you see here is a massive breakout if it holds over 28. And you got to wonder is, forget about the CPI and the PPI. I mean, this is why people are so, and I'm rightfully so, but they're so focused on these numbers, and they're lagging. They're not leading. We like to look at leading indicators, which is why I've been watching retail as a lead indicator, and I've been watching the bonds as a lead indicator, and I've been watching the dollar and the silver and the gold. And now let's look at our dear little sugar. Okay, so unlike the TLTs, which you were trying to point out was the
Right.
head and shoulders bottom, not only does this have a potential head and shoulders bottom, but look at that beautiful double bottom going back from August to now. It held at 1750 like a rock. And now if it can get through $20, and this morning it was trading above, now I think it's trading a little bit on 20, it's at 19.90 right now. If we get a close over, not $20, excuse me, 20 cents, that sugar to me, even more than corn and wheat and soybeans, is so key for two reasons.
It's in everything.
It's in everything, and it's used as a biofuel as well.
Yeah, right.
But still, sugar is the comfort food, right? When people are under stress, and regardless of all the bad press about sugar, people still turn to it when they're under stress or when things are financially difficult for them because.
Oh, I confess I had an Edgemans chocolate donut last night before I went to bed. And I used to eat a lot of Oreo cookies and milk as a kid. So I know the comfort. I'd pass out after about 10 Oreos and a quart.
Oh, of course, the sugar rush and then the sugar drop. Right? But anyway, but just to stick to the topic, I mean, this is really to me scary. When I say scary for people who are so unprepared because nobody on the media is talking about this potential super cycle of inflation. And I'm not saying it's going to happen, but I'm saying the signs are there. And even China doing well is another potential inflationary sign.
Okay.
Deglobalization is another.
How about all the emerging markets coming? I mean, DAX has been out, even the developed markets are outperforming us. Emerging markets, if we have this dollar top, is where you want to go. And China, here's China. So China's dead and they can't make anything happen. But the Chinese stocks have been outperforming, which is an emerging market stock, right? BABA, okay, it's a poster boy. Or there's FXI.
Right.
I think this is where the money is after if we get a correction in equities into the spring, that outside markets will outperform the U.S.
I think right now, that ratio got so wide. I mean, I love we see those ratios get stretched to the max, just like you're showing us with silver gold. There are so many ratios like that. Emerging markets to the S&P was another one. What's so interesting to me is, BABA was one of my top picks in my Outlook 2025. So I'm happy to see it doing well. What I'm sort of scratching my head about a little bit is Vietnam. I was 100% convinced, and I'm still pretty much convinced that VNM has bottomed, but it hasn't gone anywhere. I just feel like that Asian market should be doing better. So I would keep my eyes there as well. I mean, 11 has been basically sort of the rock bottom. It's been trying to go up and not clearing those highs, so then it sells off. If it gets through like 1170 in terms of an emerging market, I think that could be really, really interesting. I think you got to keep your eyes on South Africa because of its mining potential. And Brazil would be another one, although I think there's a little bit of political issues there, so I would not necessarily go to that one first. But that's in the emerging markets, that's kind of where I've been looking besides China and Vietnam in the Asian area. And then, if commodities do continue to run, then you have to look at the commodity producing countries, and that's
Canada that we're going to go to war with. I'm looking at, I wanted to ask you because you know, I see a lot of movie themes in the markets right now. And let's talk Mag 7. These were the leaders. They're now the laggards. People are starting to wake up to it. But my point being, here's Apple was the first one they took out to shoot. Then they took out NVIDIA. It's trying to come back, but it's down a buck.
It hit right resistance, yeah.
Yeah, took out Microsoft and shot it. Took out Google last week and shot it.
Right.
Meta's the only thing going. So my question is, in the movie The Magnificent Seven, 3 of them survived. Do you think that life could imitate art
Well,
here
Netflix,
in the Mag 7? Huh?
Well, if we're talking movies, let's talk Netflix. Isn't that in the Mag 7 as well? That's surviving.
That's right. So there's a couple.
Right. There's Netflix surviving. There's Meta surviving. I mean, I wouldn't.
So there you go.
Right. And Tesla has gotten quite the decline, but it's really into some major support. So we'll see what happens here with Tesla.
I don't know. I doubt that. A lot of people are saying, yeah, the market's broadening out, and I could see it in the Russell and stuff. But these are the soldiers that got us here to these astronomical levels. I don't think there could be enough rotation to make up for a bear market in the Mag 7 not affecting the averages.
100% agree. In fact, what I really basically say in the report and when I talk about it on media is that what we don't need necessarily the Mag 7 and the growth stocks to lead, but we need them to stay in the game. And that's, talk about my modern family, that's where SMH, sister semiconductors, I call that area, is key, because it has been holding a 50-week moving average for 3 years. It tested it last week. It came back through it, but it's sort of sitting right around it here. And so if we break down, let's say back under that 240, 237, which has been sort of close to recent lows, that's when you have to say, whoa, I mean, it's not rotation. It's market is in trouble because, like you say, the soldiers are starting to go on leave.
Yeah.
And we need them to at least stay in the game. And
I mean, the semis haven't made a new high since July of 24.
Right, they were the first ones to top out. Yeah, and how unusual is that? So, if we're looking around the family, of course, you've mentioned IWM, that 217 to 220 level has been sort of holding. Well, that has to continue to hold. I mean, these are the areas that I've been watching. XRT, we just talked about. Semiconductors, we just talked about. KRE looked like it was having some relative strength. That's regional banks, and it's still doing okay. IYT did better because of Uber, but now with Lyft coming in lower and Uber now in sympathy to Lyft as opposed to the other way around, we got to keep our eyes there. But let's face it, that's why I have an economic modern family. It's called economic modern family because it's such a great view into the economy through these sectors. And right now, they're not exactly dead. That's the glass half full, but they're not exactly leading or proving the broadening out, as you say. So that means the glass is also half empty. And this is a really good time to focus on commodities, as we talked about, focus on emerging markets, as you said, but let's not get too hasty until we see that dollar, what that's going to do. And I wouldn't worry about the bonds so much if you're going into some of those other areas.
Okay, and this has been the lead group for a while, the financials, right?
Right.
So I always say to myself, okay, if a leader is starting to falter, the weak will get weaker, and there's cracks in the mow of XLF and B of A. And one of the reasons I'm bearish B of A is they have the biggest book of long duration paper. So if the bonds, if rates are going to head up and maybe even sharply, I think they'll be vulnerable. But,
well, and also a lot of the bank earnings were because of huge amounts of investment money You know, and so if people start to run to cash, then that would also affect the banks for sure. So, yeah, I mean, I'm just looking to see what's holding up here green before we go in. You know, I still an unpopular opinion is that we're still going to see some movement in electric cars. Oil, of course, is still the X factor. It started to creep up yesterday, but it had to get through 74 dollars a barrel in WTI, and it didn't, so it's come off a little bit. But I'm looking at some of the oil companies because they've been so beat up. I mean, how could you not watch Occidental, knowing the position that Buffett has in there? And I'm looking to see if it takes out 50, and that's actually green right now. Plug, which has been so slaughtered, amazingly green right now. Silver, by the way, went to green. Vietnam is green. In the biotech space, sometimes
they're looking good.
It could, there's some that have been so beat up that I've been watching. Moderna would be one, but you know, also in the diet drug, Eli Lilly started to do pretty good. Novo got beat up because there was that story about 6 people, I think, started to experience sight problems. One actually went blind. You know, you can't count on 6 people, but that's the kind of story that really,
yeah,
you know, it's like what happened to Chipotle years ago. You know, a lot of people got sick and that stock got killed. But, you know, right, FXI, China's up. My God, all the sectors are down right now, all of them. But, you know, we just have to be very careful. But so I'm switching my focus to not so much equities.
Commodities.
I mean, coffee, geez, coffee has been insane. And so we'll see. You know, I got a little bit involved in quantum computing and that thing got killed. So I'm waiting to see if it gets totally oversold because I still believe there's some future there. I mean, I don't think that it's 20 years out at all. I think I agree more with Gates that it's more like 5 years out. And I did post yesterday, by the way, on X that I got out of all my cryptocurrencies. I have been in cryptocurrencies, some position or another, for 3 years. And yesterday, in the morning, before the market even opened, I just hit the sell button on everything just to preserve cash. So do I think that crypto can go way down? It could. But right now, while it's trying to sort it out, I just figured I'd stand aside because you can always jump back in. But yeah, I mean, it's tough right here right now, and people are being sold a bill of goods on these high-flying areas based on future with no real substance in what's going on in the present, and that could be kind of dangerous. So, you know,
I think NVIDIA is the poster child for it.
Absolutely. NVIDIA is the poster child. I mean, even Palantir, yay, we were long it in the quant. We took our last profit at 117. And I think in some models we're still in a tail, others we're completely out of it now. You know, you gotta have some sense here, people, and not listen to what the media is telling you about what's hot, because that makes it sound so easy. And like every analyst that comes on, like they've caught that move. And trust me, they haven't. So, you know, you really have to think logically. And right now, what we're seeing is, right, inflation's sticky, consumers hurt. As you mentioned before, Trump is putting pressure to lower the rates because he understands that that's what's happening. He wants the consumer to stay in the game. And yet at the same time, he's trying to be tough on tariffs. He's trying to be all things to all people. And we know that that cannot sustain.
Yeah. Well, he'll really be hammering Powell to lower rates when he sees what the bond market does today. You know, I think that people during difficult markets, and let's face it, we're in a new regime, right? I mean, the times they are changing. So anyway, I believe that these 3 people right here, and you could just tell from listening to Mish talk about everything in the universe in less than 30 minutes, that you could learn and have a guide and be mentored. I get her emails that are the free ones that are very informative. It tells me what Mish is looking at, and I know how to trade, but I do like to see or know what people are doing or thinking that I respect. It's kind of my research and mastermind. I do these interviews not just for you guys. I do it as, we me. Now it's me we. Okay. So Michelle, always great, getting together and batting the ball around with you. I hope this is a very successful year for you, your team, and all who read your research and all who hear your stuff.
Thank you so much, Dale. We wish the same to you. We love you guys. And yes, you're one of the good guys. You're doing so much to educate people from a much more sane place than just hype and headlines and movie titles, if you will.
Yeah.
So
Yeah.
congratulations to you too. And I'm so happy to see you're still here
Yeah.
as well, doing well. So thank
All
you so
right.
much for having me on.
So follow Michelle at Market Minute on X and go to marketgauge.com and sign up for, at the minimum, get on their list. And that's a wrap. That's a wrap. Don't just count your pips, count your blessings. It was great to have Michelle with us, don't you think, everybody? And that's a wrap. You could join the team in 14 minutes. And don't just count your pips, count your blessings. It was a great show. Michelle gave us some great ideas today. Thank you, my trading warrior sister.
Thank you so much, brother.
All right. All right.
Bruh.
That's see ya. See ya. And everyone have a great day trading. Be careful. There's no law in just watching if things are too volatile. There's no law you have to trade. Sometimes you're paid to wait till the dust settles. And that's a wrap. Good hunting, everyone. And thanks again, Michelle.
Thank you.
See you in the spring.